feel like a lot of people are getting robbed.
First, robbed by hurricane surge, blistering winds, and fires on streets too flooded to extinguish.
The fire truck couldn't get back here to help us.
Then burned again by deductibles needed to rebuild that can cost $10,000 to $20,000 or more.
I was going to have to mortgage my house out just to pay my deductible.
And then when policies come up for renewal, the next bomb hits.
$17,000. And it's actually a 120% increase from last year.
We helped this man save nearly $10,000. And for the next half hour, we'll show you tips and tricks the insurance companies may not want you to know.
Well, we were told that if we put my husband's name on the policy first, that they could save us $300 more.
If you're fed up with soaring home and auto premiums, you came to the right place.
And these insurance companies, they need to wake up to the real world.
We're investigating insurance insanity and how to save.
I'm Craig Patrick, and we'll start with the soaring cost of car insurance because some drivers pay much more for reasons you may not expect.
Meet Danny Williams, a professional driver who's driven high-end clients and business executives and vans, limos, you name it, for the past 40 years.
How many accidents did you have in all those years?
0.
Not a one.
No.
Punched the wheels and the whole car flipped over, didn't even hit the sides.
Now meet Augie Mauser. His story is a little different.
I was chasing, these guys.
As a young man, he flipped his car racing after other cars.
Who was at fault on that?
I was.
Then later in life, he had some other mishaps.
Some minor fender benders, and as I kind
You've
of...
had some minor fender benders too?
Oh, yeah. Yeah.
But Augie got a break on his car insurance while Danny took a hit. $92 a month for Augie versus $160 a month for Danny.
Wow. Well, maybe I need to switch insurance companies.
Well, he tried shopping rates, but it didn't help. At first, Danny thought he might have paid more because he had a nice car, a relatively new Nissan Maxima. But then we told him Augie drove one just like it.
A relatively new Nissan Maxima.
Oh, dear.
Danny has something else working against him he did not realize.
It's very wrong, and it's hurting me tremendously.
He did not graduate from college and has a blue-collar job. And that cost him on his car insurance, even with a spotless record.
Well, the system is broken.
So you're a PhD?
Yes.
Augie has a doctorate, ran a cigar business, and with no recent accidents, he got a much better deal.
I think it's unfair.
Years ago, a state investigation compared rates for white-collar workers like business owners, doctors, and engineers with blue-collar workers like mechanics, and it found a typical mechanic paid 3 times more. And the Consumer Federation of America found a similar gap in their recent research.
This distorts the market. It's not an accurate measure of how risky someone is to insure.
And there's something else about Augie and Danny we didn't tell you. We did these interviews with them 10 years ago. And guess what's happened since?
We stayed connected after that story.
That's how friendships develop.
I got to know Augie, and I got to know Danny, and they both kept good records.
It's been 10 years. Any issues, any claims, any accidents in 10 years?
Nothing.
Augie had one claim.
And there was a branch that was hanging there, and it scraped the top of the van.
Around 2018, you backed into a branch.
Yeah. So I made a claim on that.
And we found the disparity in their rates continued, with Danny consistently paying at least $70 more per month. Which brings us to how much more Danny paid in the course of 10 years. At least $8,400 and counting.
An extra $8,400. Wow. And no accidents.
It's not right. That's not right.
Augie's doctorate in psychology paid off much more than he thought, and he says more than it should have when it comes to this.
As an expert in psychology, can not getting a college degree make you more likely to crash cars?
Not the fact of not having the degree.
The insurance industry says companies tend to charge drivers like Danny more based on data and statistics.
Well, the insurance companies claim that they have done tests and studies and found that your education level is linked to how risky you are to insure. But when we asked, can you show us like the evidence and the data for that, they usually clam up and say, we don't want to share that because it's proprietary information.
So I tried to change insurance companies, and yet still the companies I changed to weren't, their insurance policies were even higher.
Augie thought of what Danny could have done with an extra $8,400.
You could use it towards the education of your children.
Which is interesting because in the 10 years since our first interview, Danny took out a loan to help put his son through school. And as he paid at least $8,400 more than Augie in insurance, guess how much he borrowed?
The loan was $8,400. To be exact, $8,400. What a coincidence, right?
Plus thousands more in interest.
Roughly about $4,000, because the interest is, when I got the loan, the interest rate was high anyway.
And higher debt can drive down borrowers' credit scores, which can drive up car insurance premiums hundreds of dollars more through the course of a year.
We looked at Florida, and we found that consumers with a perfect driving record and excellent credit, your average auto insurance premium was about $820. But if you have poor credit, you are paying an average of $2,000 for auto insurance, over twice as much. And that's astonishing.
We also found insurance rates can change for a married couple depending on which name is listed first. Up next, we'll show you why and share more hacks that could save you hundreds of dollars.
Ruth Allen couldn't believe how much her car insurance bill shot up.
We've had no auto accidents. We've had no car violations. We've had no speeding violations, no infractions, nothing.
Ruth and her husband's premiums still rose 35% this year, or $800 more. But then they got a break simply by switching the order of their names in the policy.
Well, we were told that if we put my husband's name on the policy first, that they could save us $300 more.
Why?
I'm not quite sure. They're insuring the same people and the same automobiles.
Yes, but a lot of people don't realize how the order of the names can sometimes affect the price. While everyone in the policy is rated in terms of their driving records, policies are also rated based on other factors specific to the primary driver or whoever is listed first.
The only thing I can think of is that my husband is younger than I.
Car insurance costs more when we're young, then rates go down for 30 plus years, and then they go back up as we age.
Age probably is the biggest difference.
Mark Friedlander speaks for the Insurance Information Institute, an association and research arm of the insurance industry. And he says there are more than a dozen rating factors that determine prices beyond the primary driver's age.
Certain occupations are considered higher risk, for example, construction workers.
Builders tend to pay more than office workers. And while it helped Ruth to list her husband first due to an age gap, it often works the other way around.
If you have one male and one female on the policy, the female is probably going to be rated lower risk than the male on the same policy.
So with all other factors being equal or roughly equal, listing a wife before a husband can bring down the bill.
Gender is a factor because actuarial analysis of the insurance industry shows that female drivers tend to be safer and have less accident frequency than male drivers, and male drivers also have higher levels of DUI infractions than females.
But all of this can be outweighed by the primary driver's credit score. That can swing the price more than $1,000 through the course of a year. Your home address can also make a big difference.
Auto insurance companies charge people more, sometimes a lot more, based on the neighborhood or zip code that they live in.
Neighborhoods with higher frequencies of accidents have higher rates of insurance. Now, at this point, you may be thinking, well, you've given us a lot of factors here, so how do you know which ones carry the most weight in setting the price? And the short answer is, we don't know. Each company puts a different weight on each variable, and they use different models to project a driver's risk of getting into a crash. And that's why it's worth getting multiple quotes and seeing how they can vary substantially between insurers.
And you could get 3 quotes that could be several $100 difference between the 3.
You can also let your insurance company track your driving habits and either pay less or more depending on what they see.
Some companies may ding you for bad driving habits.
Many will also charge more for insuring an electric car because they tend to cost more to repair. But that also varies a lot from one company to the other. And by shopping rates, you could save hundreds of dollars just from a couple of hours of work.
Insurers also offer discounts for seniors, veterans, honor roll students, and much more. Ask for and take as many as you can. Coming up, we'll expose runaway quotes on home insurance and show you how you could get the same level of coverage for thousands of dollars less. A lot of people don't realize how much home insurance rates can rise in a year, especially people who move to Florida from other states.
Dave Lesko and his father Joe moved from Georgia to this home in Dunedin and cannot believe the difference.
I've never seen anything like it before.
They're stunned by the way home insurance works or doesn't work in the state of Florida.
I said, Dave, this is absolutely idiotic.
They bought this house in 2021.
I think everything we could have done to reinforce the home and update it for current standards is pretty much what we did.
He spent around $100,000 bolstering the house to protect it from wind damage.
We put all new hurricane windows, PG&T windows, which are hurricane proof. We reinforced the roof with straps.
And protect it from water damage.
A system to take the water away from the house during a rainstorm.
To reduce the risk of leaks or broken water pipes in his house.
Redid the plumbing in the whole house.
And to reduce the risk of fire.
So we ended up rewiring the whole house.
Then after all that work and money, he looked forward to getting a break on his home insurance bill and ordered a 4-point inspection to bring it home.
I did.
What did it show?
That I met all the specs of what was required.
Now, in 2022, the year they renovated their home, insurance cost around $5,500. But then in 2023, instead of their rate dropping, they got dropped as customers. And the cheapest replacement they could find cost around $7,500. $2,000 more than what they were paying before the renovations.
And these insurance companies, they need to wake up to the real world.
At this point, they knew rates were soaring for everyone, and they hoped all the upgrades would at least keep their premium in check for 2024. But when Dave finally got the renewal notice in the mail, his heart sank.
$17,000. And it's actually a 120% increase from last year.
$17,000. $10,000 more than last year. $12,000 more than what they paid just 2 years ago, before $100,000 in upgrades.
This is robbery.
And if you don't have $17,000 or don't want your mortgage to shoot up another $833 a month, the notice offered a loan option to finance insurance.
Look at the interest rate.
21.5%.
If you're wondering why the price soared $10,000, we may never get a firm answer on that. The independent agent who lined up the policy could not say for sure.
But her belief was that this company doesn't want to insure homes in Pinellas County anymore.
We worked with Dave in shopping for cheaper options, and we found some in the private market starting around $8,700. But in the end, Dave decided to go with state-run Citizens Insurance for around $6,600. That's $2,000 less than the cheapest private coverage we can find, and with a slightly higher level of coverage, and it's $1,000 less than what he had been paying.
I guess it's surprising.
And for all the knocks on Citizens, the Insurance Information Institute, whose members are insurance companies, say it can be the best deal in terms of money.
Budget conscious, you're going to pick price. First, Citizens is very solid. You have very secure coverage with Citizens. Your claims will always be paid.
There are some catches. First, you're not allowed to get Citizens insurance if a private company comes within 20% of the Citizens quote, which wasn't an issue for Dave. And second, a private company could pluck you out of the Citizens pool if they offer a quote up to 20% higher than what you are paying. And third, with Citizens, you run the risk of paying a surcharge up to 15% of your premium if major disasters strike, and Citizens needs more money to pay all the claims. But even with a 15% surcharge, if that happens, Dave still comes out $1,000 ahead.
My premium is less with Citizens, and my coverage is higher, so it's better overall.
Even with the new flood insurance requirement, typically you are going to be ahead in terms of total cost of insurance because Citizens rates run on average about 30% less in the private market.
Well, the governor and legislative majority don't want people in the citizens pool because it exposes the state to risk. And one too many disasters could eventually require a bailout from all policyholders. But in the meantime, the same state leaders who don't want Citizens to grow are also making it the best deal in town.
The problem with Citizens is they're rate restricted. That's due to state regulations. They're not allowed to charge actuarially sound rates. So they've been underselling the price of coverage.
For Joe and Dave and many others, that's a problem that currently works to their advantage. And that's a big reason why Citizens, the so-called insurer of last resort, continues to add thousands of new customers a week.
It's the best policy out there if you are having trouble getting a policy.
Know your policy renewal date and shop rates as soon as you can. Independent agents write policies for a lot of companies, but each has a different mix of carriers they work with. Well, coming up, state leaders say we're all paying for storm damage that never occurred. We'll show you why and how to stop it. Insurance paid for a lot of new roofs that may or may not have been storm damaged. And we obtained records that raise questions about the state's ability to police it.
The nightmare started with a knock on the door.
Kim Ferris says that man at her door caught her off guard.
Did you know we had a storm here? Do you mind if I check your roof for you? And I said, sure.
Was there a storm?
I didn't hear of a storm. He told me it was January 15th of 22.
What kind of storm?
A hurricane and a tornado.
A hurricane in January?
Yes.
And you can probably guess what happened next.
And he says, look at that. I found a shingle.
He said, there's a shingle? He said, look, this is a shingle?
A shingle off my roof.
Was it supposed to show storm damage or something?
Well, he told me that it came off my roof and I had storm damage from the tornado and hurricane that came by.
And that she could get a whole new roof and that her insurance company would pay for it.
So I said, I'm going to think about it. He said, would you mind signing this paper? I said, what's that for? He said that I was here. I said, sure, no problem.
She said she then called two other roofers and neither found any storm damage. But that paper she signed came back to haunt her.
He said, we have a contract. I said, what contract? I never got a paper, copy, or anything.
What was that piece of paper you had signed?
I don't know. I never got a copy of it.
Did you read the paper?
No.
She said she told him she was going with somebody else until he said this.
Oh, you can't do that because we're going to sue you now for 33.5% of the insurance money. I said, but I never put a claim in. I said, well, we did.
She said nearly $40,000 later, she got a new roof. She paid a $1,000 deductible while her insurance company, Citizens, paid the rest.
The insurance company paid? They didn't deny the claim or anything?
No, they paid. They paid everything.
Well, insurance may question a claim like that, but decide it's probably cheaper just to pay the claim than the cost of duking it out in court.
In lieu of paying $70,000 or $80,000 to litigate the claim, oftentimes insurers will just write a $25,000 or $35,000 check just to get rid of it.
Well, the legislature recently banned papers known as assignment of benefits, which allowed roofers to file claims on homeowners' behalf, and they reduced the amount of financial risk that insurance companies face when they fight claims in court. But lawmakers, realtors, and home inspectors like Michael Bender say the problem starts with contractors who claim a roof is storm damage when it really isn't. And that source of the problem appears to have gone largely unaddressed.
And I'm watching them canvass the neighborhood, knocking on door after door after door after door after door after door. And then we come back 3 weeks later to do the insurance inspections for the closing, and there they all are, bang, 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 putting roofs on everywhere.
We can't confirm Kim Ferris's claims and don't know whether they rise to the level of insurance fraud. She reported it to the state to investigate. We do know the State Department of Financial Services is responsible for policing contractor insurance fraud, and former State Senator Jeff Brandes says it also has a problem.
Department of Financial Services is really overwhelmed with the amount of cases that come through their door.
We started requesting arrest stats last summer. It took more than a year and repeated requests to get the home insurance fraud numbers we're about to show you. On one hand, the state CFO who runs the department which polices fraud says we're all under attack.
Florida's communities are under attack by fraudsters who are willing to do anything to game the system. And frankly, they are stealing from every single one of us.
But look at this. In 2018, state agents only made a total of 53 arrests across Florida. In 2019, they dropped to 37 arrests. And in 2020, they dipped to 22 statewide.
And so a lot of it has slipped through the cracks.
In 2021, they nudged back up to a total of 39 arrests. And by 2022, crept up to a total of 54.
I think the process broke down at the Department of Financial Services level.
In 2023, arrests ticked up to 102 and were on a similar pace in 2024. All much lower than what those who say they have seen rampant fraud in a state of more than 22 million people expected.
There's a disconnect. There's some system that's not in place. I don't know if it's somebody not doing their job or just some system that we don't have. I don't know, but it's not getting done.
Michael Jaworski is Florida's insurance commissioner.
Then why aren't we seeing more arrests and convictions for that type of criminal fraud?
I think we do see regular activity in that space, but I think it's also hard to pin down.
Jaworski runs OIR, which investigates the insurance industry, while CFO Petronas runs DFS, which investigates contractor fraud.
Those should be probably combined into one entity. They should be focusing on identifying fraud wherever they can.
If you suspect home insurance fraud, you can report it to the state for potential cash rewards. Well, thank you for watching. You'll find much more on Fox 13 News and the Fox Local app.